Greetings, members one and all of the Salivation Nation. Gold and silver are still holding on to those important resistance levels of $1,500 for gold and $17 for silver per ounce. You know, it is fascinating, though. We're seeing a lot of psychology in the markets. You know, yesterday it was all this fear about the bond yield index and how that's going to lead to a recession. And today, well, there's not so much worry about that. There's other things to be concerned about, but let's explore this article from Kitco about how risk appetite upticks with gold prices weaker, and then we'll get into another article that talks about China not obtaining as much gold. That can have an effect too. But let's explore. Yes, so gold prices are moderately lower in the early U.S. trading Friday. Safe haven demand has waned a bit in the U.S. as world stock markets are rallying to end the trading week. Actually, the markets are closed now. And from a technical and trader perspective, today's price action in gold and silver is just a normal backing and filling on the charts, which is what bull market needs routinely to keep the price uptrend alive and healthy. And it also bolsters those technical resistance levels. December gold futures were last down $9.90 an ounce to $1,521.50. September COMEX silver prices were last down 0.06 at $17.14.5 an ounce. U.S. stock indexes are pointing towards solidly higher openings when the New York day session begins. The stock market got a boost in the afternoon trading Thursday when reports hit the wires that European Central Bank rate-setting official Olli Rehn said the ECB will be rolling out new economic stimulus measures in September. The U.S. Fed funds future markets now shows a 100% chance the Federal Reserve will lower its key interest rate in September. And the Asian and stock markets also saw gains Friday due in part to the ECB news. Now, you know, when the Federal Reserve lowers its interest rates, that means that gold and silver is going to go up. And this part of this climb will probably continue, or at least not pull back as much. We'll kind of get into that next article. On the U.S.-China trade war front, President Trump late Thursday said he will be talking to his counterpart, President Xi, soon. Trump also made comments that could be construed as both negative and positive regarding progress in resolving the dispute. The key outside markets today see NYMEX crude oil prices higher and trading just below $55.50 a barrel. The U.S. dollar index is modestly higher. So that strength in the dollar is also what's having an effect on the gold and silver prices. U.S. economic data due for release Friday includes new residential construction and University of Michigan Consumer Sentiment Survey. Here we can see the 24-hour spot gold price. And it goes into some of the technical analysis here. And we'll kind of take a look at those numbers, here in a moment. But let's take a look here at this article from yesterday from MarketWatch on why gold's strong undercurrent has some analysts eyeing $2,000 an ounce. And would require a much weaker dollar, but says that gold has benefited from a spate of supportive factors over the last few months, and some bulls now see the precious metal making a climb to a record high of $2,000 an ounce. It will need more fuel to make that move, however, and the timeline for that rally remains uncertain. There has been a strong undercurrent for demand for gold, said Brian London, editor of Gold Newsletter. Even as short-term factors like the China trade dispute may come and go, longer-term investors are confident that the issues of monetary debasement and other geopolitical factors will continue to impact the market. You know, it's that erosion of the dollar. Even at a steady 2% decline in its value targeted by the Federal Reserve and the dollar having such an impact on the world, you know, it's bound to have an effect, and gold will climb. It'll climb up higher. And I agree with this. It almost seems obvious, but maybe it's more relevant nowadays considering these other factors, other than just the normal things that occur. December gold futures rose. We'll look at that gold prices later on here. The record settlement high for futures prices was at roughly $1,891.90, $1,891.90 on August the 22nd, 2011. The prices did touch intraday highs near $1,918 during that time. I will note that right now the U.S. Mint has a gold coin for sale for $1,940. So if you want to reminisce about times gone by when gold was high, well, today you can make a purchase of a gold coin for that much. Think of it as you're buying it at spot or near it around late summer of 2011. Concerns over a possible recession sparked by the recent inversion of the yield curve for the 2-year and 10-year Treasury yields, some weak global economic data, and the U.S. Federal Reserve's first interest rate cut since 2008 have dressed up some of gold's appeal as a haven. But that's so yesterday's news, literally, although it hasn't beaten it down that much. We'll take a look at those numbers again in a moment here. Stan Barty, Chief Executive Officer of private merchant bank Forbes in Manhattan, doesn't believe that gold is moving up because of short-term market fears. It's a move that has been a long time coming. After the 2003-2004 period, hard assets were in demand as the smart money was looking away from stocks and into gold to protect themselves, says Barty. Then in the last 8 to 10 years, we've seen bull markets and stocks and lived a low interest rate environment that is dangerous for inflation. Given the backdrop, he expects gold prices to top $2,000 by the end of next year. That would be a record for COMEX futures. More near-term, Barty says gold jumping from $1,480 to $1,600 in the next quarter. So again, the cap up here says gold climbing to $1,800, even $2,000 an ounce is a near certainty given enough time. But you can pretty much seems to state the obvious. The rise will accelerate with the indications that the Fed will return to quantitative easing, or QE, or large-scale asset purchases by central bank to help stimulate the economy and add liquidity to capital markets would be supportive for gold. The move would likely pressure the dollar and could lead to inflation. The central banks are struggling with stubbornly low inflation despite past rounds of QE. Gold is often seen as a hedge against inflation. To see such a big move higher for gold, however, the market may need to see the devaluation of the dollar in response to the devaluation of the Chinese yuan, said Derek Scott, the president and senior analyst of precious metal retailers.com. Other factors that could significantly boost the metal's price would be heightened geopolitical risk related to current events such as the conflict in Iran, Hong Kong, or some other unforeseen but unsurprising actions taken by a given nation. Regardless, a climb for $1,800 to $2,000 for gold will happen, though the timeline remains to be seen. Meanwhile, a report from Reuters last week that China has restricted its imports of gold since May had little, if any, impact on gold prices. This is the key. So they've restricted imports of gold here, not getting as much, although they are also a producer of gold. The report said China may be trying to curb outflows of U.S. dollars to help strengthen its yuan currency as its economy slows. China, which is the largest importer of gold, cut shipments of the metal by some 300 ounces to 500 ounces compared with last year. The report said, citing sources with direct knowledge of the matter, last year the country imported about 1,500 metric tons of gold. I think this meant to be 300 metric tons, but I could be wrong. Yeah, it seems to, or million ounces or whatever. Last year, the country imported about 1,500 metric tons of gold, which is about 1/3 of the world's total supply, the report said. If true, this would be a significant concern for the gold market. It's in London. If this is a strictly enforced ban that lasts some time, I can't see how it won't have a big effect on global flows. Even so, the good news is that investor demand has soared for gold worldwide, so this development seems to be more likely to slow gold's ascent rather than halt it. And that is an important key, and I think we're going to see this in the silver markets too. And it's also evident as the view counts on many of our videos seem to be going up a bit, because I think there is some renewed interest in the precious metals. And that's a good sign, especially considering, things like digital investments such as Bitcoin and the like. Scott believes the reported move by China may prompt gold to test a lower level between 1463 and 1485, and that would be seen as a huge opportunity to buy. So that is key. Look out if we do see gold dip during that time below that $1,500 critical point. Here are the precious metal prices. We can see the movements in gold and silver downwards, but not that much, really, given today's news and what's going on here. And so with that being said, silver is still solidly above that $17 an ounce, and gold is above $1,500 an ounce. But look at what happened with the other metals. Platinum is up $10, $8.52. Palladium is up $4 to $14.57. Rhodium is up $60, $38.90. Rhodium is the winner today with 1.65%. But really, you can't really compare rhodium to these other metals for sure. But it does look like silver and gold are making their movements here. And it's fascinating to see. And we'll see what happens next week, especially with what they're talking about here. If China continues to cut their imports, we could see gold go down a bit more. And that would be a good buying opportunity for sure. It's hard to believe that we're seeing 1463 to 1485 gold as being good buying opportunity, given what we've seen over the last couple of years here. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, share, comment, and subscribe.